Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 6th of May, 2020. This is episode number 1749. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning we have a slight risk on sentiment. The S&P is trading inside of yesterday's range, a little pop after continuing the drop from yesterday overnight. We're seeing the markets kind of balancing out a little bit this morning on the indices. Crude has come off. It's trading 23.14 down $1.42 or 5.8%. This is crude has held its own pretty well until the Russian energy minister made comments this morning regarding the speed of recovery and the potential reaching of the cap quite quickly by Russia. So that spells more supply than demand, and so price drops. Glad that economics are actually working. Gold is off. It's trading at 1693, down 17 and a half dollars, $18.4 now, 1%. The leader today is the Nasdaq at 62.5%, plus 0.7, and this cat is just meowing like crazy over here. Sorry if you hear it in the video. Nothing I can do about it. This beautiful Bengal cat is just very irritated for some reason this morning. Anyway, the Dow is up 140 points or 0.6%. So clearly allocation is to risk this morning. And that's how things have set up. Looking at the calendar for today, we did get ADP this morning, and incredibly, the forecast was quite in line. Consensus was for negative 20 million. Negative 20 million. Can you believe that? Negative 20 million. The forecast is for negative 20.8 million. Came in at negative 20.236 million. Very came in quite close to the forecast. Now contrast that to the prior, which was negative 27,000, almost a factor of 1,000 from March till April. Quite amazing. Today we do get crude oil stocks at 10:30 Eastern. Consensus is for a surplus of 7.759 million. And then we get the balance of trade this evening at 9:30 Eastern from Australia. And then we get a bunch of numbers out of China as well. So that's what's on deck for today in terms of scheduled events. Let's take a look at what was expected yesterday versus what we got. Here it is. Maki, go away, please. So here's what was expected yesterday. We're looking for a gap higher after balancing for 2 days. The point of control, that balance is at 28.20, so that's a big target below, as I talked about yesterday. And the expectation is for a push through the overnight high, pull back to the 28.50 area, and then bounce back up to 28.82. 28.82 was the key target above. The secondary scenario is it's not able to push higher and immediately pulls back into the 28.44 area before it bounces back up. The third scenario is the gap and go scenario, which was a small pullback and the market rips up, has a pauses at 28.82, key area there, and then continues into the prior range with a potential target at 2900. That's what was expected. Here's what we got. We'll get that up on the trigger chart. Let me turn off the zigzags to reduce the noise. this is what we actually got. We got a small push down. We took out the overnight high immediately with an impulse early on. Consolidate, nice little flag here. Test of mid. Sounded important, but it's not. More tweeting. And then we get this bigger impulse right into that 2882.83 area that I talked about yesterday. Remember, this is where the market's expected to linger, right in here, right in here. Oops, hang on, right in here. So it's expected to linger right here. So we have what we had yesterday was basically scenario 3. And pushes 2882, pulls back to the mid again and again. Generally, this is a local weak low. We'd expect it to poke down, and then it breaks right through to 2889. And that was the high of the session, basically 2889, 2889.75. A failed auction here. Fed's Clarita's comments came in right here and caused an impulse down, the biggest rotation down of the day. Pull back the VWAP, and then boom, we go neutral. So here's the break of the IB high, and here's the break of the IB low. And then what we did for sure yesterday was we closed outside of the IB. So this is a neutral, extreme down day. Neutral, extreme down day. This generally tells us there is a reversal. This is a little different because it was done on news. So there's a scene of the crime right up here. The scene of the crime, as you see here, Fed's Clarita is 2887.50. That's where the auction was interrupted, and we left the point of control behind at the upper end of the range. We left the point of control um, above the IB. We closed below the IB on a neutral day. You don't see that very often. And so we expect the market to trickle down the overnight session because we clearly did not find an excess low or an unfair low here in this auction. We are likely to continue lower. We did find our low. We turned around. We bounced a lot up here in the 2881. Remember 2881.82 from yesterday, and we've pushed nearly to the high a day from yesterday back to the scene of the crime. That's the expected action on that's the expected action, and the interruption. The interruption by the news causes that, and news is very, very heavy. Both the geopolitical, political, all kinds of stuff going on with this news, and it does impact how we trade. So that's yesterday. Let's carry that forward to the overnight session. Here's the overnight session. We'll reopen, take a bounce up. Expected it to push to at least 76, 75, 77. Was unable, and it continued lower, 28.43, before it crossed over, and it's been holding these higher prices pretty much the entire night. Let's switch to scale here. What we have here is a P-shaped profile, with a weak high. We have two highs on top of each other, just 2 ticks apart, and with the mid being held. So we're in this weird position where we're below the point of control, the overnight point of control, and we are above the mid, and the point of control is almost in line with yesterday's point of control before the news. So this looks like it is setting up for another short squeeze, a further short squeeze, despite the selling that occurred yesterday. So that's what we get out of the overnight session. Volume is quite in line. Nothing to note there. In terms of the delta for yesterday, if you look at the delta for yesterday, let me expand this up a little bit. If you look at the delta for yesterday, we could see that there was a disparity here. People will call this and trade this as a delta divergence. I don't look at delta that way because the delta at the open is not, the amount of participation at the open is not the same as the amount of participation in the middle of the session. So I don't look at this and this as a delta divergence. I think you get a lot of false signals that way, but trade what you want as long as it makes money. Good on you. But overall, the delta was playing along with price yesterday. We crossed the opening price to the downside, which is the zero line on delta, and we go negative on delta as we do on price from the open. And so to me, it just seems like some of the buyers had clearly backed off yesterday, and the market was kind of allowed to fall unhampered. Let's take a look at Bookmap. Oh, my apologies. Not sure why the screens did a switcheroo here. Let's pull Bookmap over. Don't like when it does that. Here we go. All right. So with Bookmap, you've got the market kind of shifting to the downside pretty much, from since the drop that came in with oil right in here. This looks like a lot of noise. It's really not. Let's reduce the contrast a little bit. And then has pushed into some liquidity. It's been resting there for a while. And yeah, I'm not sure how you leave politics out of trading. It's a tough thing to do, but since it's all driven by politics right now. But you can see that there's liquidity that's kind of come in here, and it's been steady. We've traded into it. We've had several collisions. We've got this liquidity at 28.84, again, that big area, 28.81, 82, 83. And then we have this liquidity at 28.84. But other than that, if you look above and below, it's fairly neat. There's not much there. We see a bit more liquidity at 62, but a solid bid down at 28.59 and a half. In my opinion, this is setting up to be a relatively choppy day, sitting in between some key levels, and it's fairly imbalanced given the recent action and where we are currently. It's fairly imbalanced. The market wants. I'm seeing energy that wants to push to 2900, 2904, and start moving up into the mid 2900s. There's quite a bit of energy pent up looking for that, and they're all waiting for further coronavirus news or whatever to be able to do that. But overall, it fell yesterday quite easily to the downside. This boom, it fell to the downside quite well and is struggling to push up. I think both sides are likely to be active at the open, and it'll be very, very difficult. It'll take a little bit of time this morning for it to find traction in either direction, in my opinion. Given the stance that we're in here, we're trading right in here, right in this chunk of value right here, and the way the overnight profile is shaped, it's squeezed longs. We have a tail at the bottom, we have the point of control at the top, and to me, it looks like there's likely to be a fight here this morning. And I'm expecting it to be relatively choppy. Let's take a look at what's expected for today.
Some equity news here. Occidental saying that their Algeria sale to Total will likely not proceed.
All right. So let's look at that. So what are we expecting for today? Let's focus, people. So today we're up against the prior point of control. We're up against we're not far from the high. We're against this 28.81 area. I'm expecting an open auction in range in value. I'm expecting it to dip into the overnight mid at 28.72. Um, the overnight mid or the overnight value low 28.72. The overnight mid is 28.65. Consolidate here, potentially push down into 28.65. But overall, I'm looking for the SOC to be taken back at what did I say? It was 28.8750. 28.8750. I'm expecting that to be taken out. I'm expecting the overnight high to be taken out, and I'm looking for this 28.89, 28.90 to be gone, and I'm looking for a test 2900 today before it consolidates. The extended target is likely to be this 2907.50. I said it 2904, but it's 2907.50, the naked point of control, and the MC point of control. This is scenario one. It is a short squeeze. Okay. That's the most likely scenario. Secondary, we open in an auction that pushes higher, tests the 28.90, consolidates up here, finds sellers, comes back into the range, tests down into the 65 or so, consolidates in here into the 59, and then holds steady. So what we have is a higher high, higher low with a point of control that's probably in line for a gap and balance type of situation. This is scenario two. That's what we're looking for up here. Now, in these kinds of situations, it's hard to tell what's what's the probability of one scenario one over two. It's hard to tell. It's hard to tell in this kind of a situation because it could go either way. I know that the overnight high is a very, very high probability break, and we're not opening far from it with the overnight point of control near yesterday's point of control. It's telling me that the market is accepting this area, and so I expect it to push higher. The key levels to pay attention to is obviously the 2900 right in here, the 2907, 2919, and 20 are very important up here, and that's the extent of the range expected. On top, on the bottom, 2859, that's the test down here, 2859. It may easily push through the 52, but the 2835 would be the next key test area. This is a low volume node, the high up here, low volume node, the high up here. I'm expecting that to be the key test area. So if it does push lower, 28.35 is your extended target. 28.59 is the immediate target. If it does push higher, then we're looking for 2907. 2900 is always in play. Century figure 2907 becomes a key target for a long. So hang in there, in my opinion. And then 2920, if it breaks away from 2907, we've got a nice 13-point push potential to the upside. That's the lay of the land. That is the terrain that we're in, and it's our job to maneuver around it, and figure out how to get in the direction of the strength. Okay. Good luck today, and I'll catch you tomorrow morning. Take care.